Okay, so we have a sample problem here for company tax reconciliation as part of our recorded lecture. Okay, so this is the problem. Okay, so you have been given this information to calculate for taxable income. Okay. So we'll start off, you will be given with accounting profit. The accounting profit, basically what you have calculated using accounting standards. And then included in this profit is an accrued expense of or accrued annual leave of 30,000 kina. But there was a previously accrued one, that's the opening balance of 20,000 kina. And then included also in calculation of the profit is the payment of the superannuation. Okay, so we have 50,000 kina, but you only pay the employee or the wage or the employee or the staff 150,000 kina. And then next, you have a prior year domestic loss or losses of 10,000 kina, and then a prior year foreign losses of 15,000 kina. Then we also have 5,000 kina as foreign income. So again, we are required to calculate or do the tax reconciliation and calculate taxable income. Now, before we do that, okay, we'll tick off each bullet. So accounting profit, we'll start on that. Now, with regards to accrued annual leave at the end of the year, so that is an accrued expense. So as per taxation rule, we will only recognize annual leave as a deduction if it is actually paid. So the 30,000 is an accrued expense that will not be allowed as a deduction, but the opening balance will be assumed to be paid. Okay, so this will be the allowed deduction in our calculation or in the tax reconciliation. Now, if we go on to the wages or the wage paid to the staff member, and then we know that the superannuation, we had a limit of the employer's payment, 15% of the gross salary. So meaning you need to multiply or to get the 15% of 150,000 and compare it to the actual payment. Any excess of that one will be disallowed as the deduction. Now, if you go on to the next bullet, the domestic loss can be allowed as a deduction, but the foreign losses, there will be a limit against the foreign income. So in this case, it is the foreign loss is 15,000 kina, and then there's a foreign income of 5,000. So the limit is up to 5,000 kina. If we go on to the solution, so we have accounting profit. We have to add back accrual of annual leave. Again, the reason why we're adding it back is because we already deducted it previously to determine accounting profit. We are just returning it back, and then we are deducting the actual annual leave that we assume to be paid, obviously because that is from the beginning balance or the opening balance, and then add the excess of superannuation which is not allowed as the deduction. So again, why we're adding it back? Because it's an overpayment or over deduction, so you have to return it back. Prior year domestic losses, that's allowed as a deduction, but the foreign loss, we can only claim up to 5,000 against the foreign income. Then to get the sum or the difference, we have the taxable income here. Thank you for listening to the recorded lecture. Hope you learned something.